Hi Shaily, welcome back. Always great to have you with us.
Thanks. I'm super excited to introduce our new offering, the Titanium Hybrid Long Short Fund.
Sounds intriguing. But before we dive in, can you explain what SIF means and its significance?
Sure. SIF stands for Specialized Investment Fund. It's an investment structure that combines the transparency and trust of mutual funds with greater flexibility in portfolio construction. This allows us to aim for better risk-adjusted returns while still operating in a well-regulated environment. What makes it particularly interesting is that in India, derivatives are typically taxed as business income, which can be less tax efficient for investors. Through the SIF framework, we can combine cash, long equity investments and derivatives together with mutual fund taxation, which is more tax efficient than business income taxation.
That's quite interesting, Shaily. So, what exactly is the role of derivatives in the Titanium Hybrid Long Short Fund?
The Titanium Hybrid Long Short Fund is designed as a multi-dimensional portfolio which opens the market for making returns during all time periods, during uptrend, downtrend, and sideways market. The fund enables bottom-up stock selection on both the long side as well as the short side, giving the fund flexibility to capture opportunities in different conditions. The fund can earn returns by taking long positions as well as short positions with, expressing both our positive and views on stocks. Additionally, the fund can protect investor portfolios during periods of expensive valuations by taking short position on market indices, for example, hedging.
That makes sense. So, Shaily, how is the Titanium Hybrid Long Short Fund positioned?
It is positioned like a dynamic asset allocation category fund with exposure across equity, fixed income, REITs, INVITs, and unhedged derivatives exposure. The fund will operate with a net equity allocation between -25% to 75% and a gross exposure of 100%. It is equipped to potentially earn returns by expressing a negative view on stocks or the market through short positions on stocks or indices, as the fund is permitted to take unhedged short derivative exposure of up to 25%. Thus, while the fund's net long position is similar to that of dynamic asset allocation category mutual funds, it offers the potential for additional returns through enhanced derivative instruments, such as unhedged shorts.
Oh, so how does the fund plan to allocate its assets?
The fund plans to allocate 50 to 55% towards cash equities, 25% towards debt, and 25% in money market instruments as margin to build exposure in unhedged derivatives, both long and short. Hedging of the cash equity portfolio may also be undertaken, however. Such hedged positions are not considered part of the fund's overall exposure.
So, Shaily, how does the fund behave during different market phases, bull, bear, or even sideways markets?
During market corrections, the fund can increase its net equity exposure by adding long positions and removing hedges, if any. In rising markets, it would endeavor to decrease net equity allocation. The fund would add hedges to protect gains and add short positions, aiming to earn returns when markets would correct. And in sideways markets, it can use paired long-short strategies within the same sector to capture opportunities. Overall, stock selection manages the upside and net equity allocation takes care of the downside. If the fund does both well, it tends to capture less of downside and good amount of upside. Doing this for a continuous period would lead to better compounding.
That's a very interesting strategy, Shaily. Before we wrap up, why should one consider investing in this fund?
So here's why you should consider investing in this fund. First, it seeks to provide enhanced risk-adjusted returns. The second, it helps in portfolio balancing and hedging. Third, it allows you to navigate across market cycles.
So don't wait. Aim to give your portfolio the edge of derivatives with the Titanium Hybrid Long Short Fund. NFO opens on the 24th of November 2025 and NFO closes on the 8th of December 2025.
Investments in specialized investment fund involves relatively high risk, including potential loss of capital, liquidity risk and market volatility. Please read all investment strategy related documents carefully before making the investment decision.